Alright, good morning guys. My name is Sean, and today session is going to go over some basic fundamentals of how EINC finance can help those in need who are new to investments. This session really wants to focus on how people can achieve financial freedom, and I will explain more what that is. For premium content and for more information, please scan the QR code or please click the link on the description. So when we are talking about EINC Finance, EINC Finance Service is actually the subcategory of application that our software developers are working on. So what this app is about is creating habits through fundamentals of investment. So you're investing in yourself, and then by investing in yourself, you are creating more and more better habits, whether that's lifestyle, finances. But this is like still working and try out, but we're trying to have the financial service, which is going to be the premium content of this app, out to people as soon as possible, especially with the current situation after the pandemic, with the whole rise and recovery session of investment and stocks. You probably heard like a lot of day traders on the news and like Robinhood traders. There's a lot of people who are investing nowadays, and I feel like there needs to be a guide on how to invest and how to gain financial freedom that people are longing for. It's really funny how people mix the terms trading and investing. People really need to know the fundamentals of difference between trading versus investing. So trading is exchange of one's good from one end to another, and when you trade, for example, stocks, you are buying and in the values that it holds. But investing, I feel like, is a little bit different, where you are putting a value to an asset that you're investing in. So I guess if you really look up the definition of day traders, I feel like day traders are like on the far left side of the trading, and I guess like long-term investment is considered in the far right of investment. But for me personally, I like to be in the middle. I like to be a trader and an investor at the same time. But for beginners, I will highly recommend that you take the route of investment, a long-term, and then you can try out a little bit of trading and day trading here and there to get the experience, because all this experience that I learned came from me investing. And I'd like to talk to you more about what my status is and in this investing field. Right now I'm looking into getting into real estate as well, which is like a long-term investment, but right now I have about 25% in risky options, and 20% in blue chip stocks, and 45% in fourth industrial stocks, and 10% in safe ETFs. So what that means, I know we're gonna go a lot more in detail about this in the future content and future sessions, but for beginners, you just need to understand that options are basically betting for or against a certain stock. So the reason it's so risky is because you're basically buying close to 100 shares when you're betting to it. It's kind of like gambling when you're betting on a horse race, when you're betting on a horse to win, basically. So when you are betting for the stocks to go up, you're basically buying what you call buying a call. And when you buy a call, it will buy 1 per 100 shares, basically. And when you're betting against the company, meaning you're thinking that stocks will go down, that's called put. And when you buy a put, you're betting against that stock, or you have an option against that stock. I mean, I don't really like to do a lot of puts, but you really need to know both ways because there are a lot of covers and stuff like that and strategies. But what I can tell you is during the summer I made about 40k, 40,000 just in profits, and I've been investing since 2014. And when I had like day trades before, I gained 600 to 1000% in the past. Another thing is blue chip stocks. I will recommend for beginners to get into the last three categories that I listed. Don't go right into the options. Because as I said, options can be very risky. Yes, it makes you a large portion of money, but at the same time it might lose you a large portion of money at the same time. So options also have expiration date, so you really need to study where the expiration date is, where to buy the strike call. But all those contents will be available in the future session and into premium contents. So 20% blue chip stocks. Let's talk about that. So 20% blue chip stocks. I consist of like all those common stocks, all those big companies, S&P 500, and then 45%. I will go in a lot more detail in this presentation because a lot of people ask like, oh, what is a good fourth industrial companies? Fourth industrial age that we already entered is the future. It's like VR, electric vehicles, automation, AI, and all those drones, and all those considered as a fourth industrial age technology. And those stocks are bound to grow. So those are considered safe. At the same time, you just gotta find the right stock, because some stock are basically false. They're fake. I can list on top of my head, for example, NIO in EV market, electric vehicle market, is I feel like it's false because they say they are the top in the electric vehicles in China, but we all know that electric vehicles right now, only dominant really company that is going out there is Tesla. Another safe stock that if you're really looking into long term and retirements and stuff like that is called ETFs. ETFs consists of like mutual funds and like a lot of big company stocks, and one of the example that I can give you that I like to invest in is called ARK Innovation ETF. ARK Innovation ETF consists of 40% of Tesla, 20% of other innovative companies. I think of Sunrise or something like that. So the reason I like that ETF, because ETF, think about it as a bundle. It's a bundle of many stocks into one stock. So you're buying like Apple, Google, and Amazon or Tesla or something like that, and all those little stocks out there. You don't have to buy them individually, but you can buy them in a bundle. That's called ETFs. But the thing about ETFs is safe because it is diversified, meaning it has many stocks that those categories contain. But ETFs usually are broken down by categories. For example, ARK Innovation is a bunch of innovative companies out there into one bundle. But the thing is, it's not that profitable, but it is safe because, as I said, it's diversified. The reason it's not that profitable is where few stocks goes well in that bundle, but few stock doesn't go well. You'll have very little uptrend per se in stock graph. And when you have that little bit of profit in one company, but another company is not doing that well, that's going to balance out to the median. So the mission objective for this meeting is we like to show you how to analyze the stock and boost your investment, because a lot of people are getting into this investment field, and not just stocks either, just investment in general, and how to be a smart investor and not really a trader, because trader you have to be kind of like a professional in that field, and how to find the right timing for a stock to buy in on. So not just stocks, but I also encourage investment, because when you're talking about stocks, you're looking at the whole market, And when you're looking at the whole market, you can see opportunities and investment everywhere, whether that's real estate, whether that's retails, or whether that's industries or whatever it is, like you can, or drop shipping or whatever. And how do we analyze the news, and how do we use the tools that's either free or premium online out there, whether that's a physical or online tool. There's a lot of tools that can help you make the better decision, and I really want to give the people my insight into a lot of the things that I found, and a lot of the things that experts that I know have found in the past. And all these three meaning objectives is going to help beginners into better financial freedom. If everyone knew how to be rich, then everyone will be rich. But that is not the case. It's a quote I kind of created because it's true. I actually heard this from my mentor. So if everyone knew how to be rich, everyone would be rich out there. But that is not the case. Like, you don't see around millionaires out there, and I'll talk more about this on the next slide, because you really have to realize the reality of the market and the society that we live in, which is capitalistic society. And when you look at the portion of it, like those three big buildings are owned by only 2,000 billionaires, okay, in this world. If that was the world in your mind, 2,000 people basically control way more than half, probably like 90% of the world. But there's also 16 million millionaires, meaning they're considered rich, right? Millionaires are considered rich, but compared to 2,000, that's a lot. 16 million people and 2,000 people. You just gotta realize that. And when you're investing, the billionaires and millionaires, yeah, some are inherited, but I think 45% of them statistically are self-made, and even 5 to 10% are invest on their own. And what I'm trying to say is, you really gotta know and follow where the millionaires and billionaires are investing and where they're going. And when you follow the market and capitalism like that, and you view it like that, you don't become the part of the middle class or poverty, which is more than 7 billion people, as you can see on the statistic below. It's just a harsh truth that you just gotta realize before you get into investment. If you want to be like everyone else, just do long, safe investments. But what I'm trying to tell you is, when you're trying to reach that financial freedom, you really have to take this course seriously, and you really have to take this session into heart. And I really want you to take this home with you. So fourth, industrial age stocks. Most of them are long term, and some includes blue chip stocks too. But for category 1, we have AI, artificial intelligence. So artificial intelligence, we have companies like Google, Apple, AMD, Intel, Microsoft, IBM, Nvidia, and QCOM. All these companies focuses heavily on investing in development of artificial intelligence. You probably know DeepMind by Google, which is artificial intelligence that beat Go in South Korea very long ago, like 9 years ago, I think. Yeah, but that is Go is a very complex ancient game that you need a lot of thinking. But the fact that AI can beat the most smartest human on earth tells you something, So that's the fourth industrial future. Okay, that's the future we're heading to. Another category is the EV market, the electric vehicles. So electric vehicles consist of Tesla, battery companies like lithium companies, Verizon, T-Mobile, AT&T, and stuff like that. The reason communication companies are in there, like Verizon and stuff, they invest heavily on communication between electric vehicles. And they're in part of development of electric vehicles if you do the research. But all these companies are the future. And when I say future, I'm not talking about those companies that are not listed here. Yeah, there are a lot of 30 plus companies that should be included in this list, but the reason I didn't invest in it because I personally did my research and did not believe in what those other companies believe for. For example, Nikola and Neo, as I said earlier, both are electric vehicle companies, but their only reason their stock is increasing, even though they have really nothing to show, is because of Tesla. Tesla is like the only company that really has something to show and gives people what they want and is the leader in automobile and big electric vehicles. I will rather invest in those automobile companies like Volkswagen. Hyundai is coming out with a new electric vehicle market, but because those companies are known to be trustworthy, you really gotta believe in the stock before you invest in it. Like when I invest in Tesla, I truly believe that Tesla is going to be the future because it is, and they've shown it multiple times. So category 3 is automation. Automation means basically chips that goes into cameras, chips that goes into our graphics card, chips talks about AIs. I really don't want to go in detail on this one because this is very complicated research. In the future, in the more premium contents, I'll go more into category 3. For category 4, we have the IoT and cloud. So IoT stands for Internet of Things, which is basically internet, and cloud is what you call like a cloud drive, for example, like Google Drive. So that's a new technology that is being implemented everywhere in this fourth industrial age. And a lot of the companies that are really focused on and investing in this are Amazon, Microsoft, Google, Oracle, and all those telecom companies as well. The reason telecom companies are like almost everywhere is because they have a lot of money in research and investment in future products. Category 5 is called shared economy. Shared economy, for example, is like Uber or apps that let you order, deliver stuff, and apps that let you share things like Google Drive, Venmo. Applications are called shared economy. And all these companies, Uber and stuff like that, where one peer-to-peer interaction within an app, or just it doesn't have to be an app. It could be any platform. But that also is another topic for another day. So all these categories are considered fourth industrial age. I know there's like I left out drones and stuff like that because there are no like IPOs, initial public offering companies that are already in the stock market right now that are really trustworthy. So all these companies that I listed now on these 3 categories are very trustworthy, but I will go in more details in every company like Google, Apple, AMD, and stuff like that, and then other categories like automation and shared economy in the future content. As I said, this is just an introductory course, and this is just to give you a taste of what financial freedom might look like for you. Elon Musk said, "It is okay to have your eggs in one basket as long as you control what happens to the basket." So I talked about risk in investment, and risk in trading. So when you're trading, you're putting all that bet into this one stock and stuff like that. And it's dangerous. It's very dangerous. It's gambling. But once you know how to control the basket, it is not dangerous. That's what Elon Musk did when he sold, when he was sleeping on a couch because he didn't have any money, because he invested all his millions of dollars from selling PayPal, investing in Tesla and SpaceX and Solar City. And now, look at him. He's the 4th richest man on Earth. Maybe 1st richest man on Mars. I'm just joking. The reason Elon Musk came from nothing all the way to 4th richest man on Earth is he knew how to control the basket. He knew how to control his investment. So when I say trading is just part of investment. So I tell people all the time, focus on where you're investing. Focus on making a smart investment. But this is just part of what I go over in one of the each stocks. So I usually have about like 10 slides for each company, analyzing the heck out of what that company is and how that company will value and how that company will grow. And this is just one of the slides that I took out from Tesla analysis. So Tesla stock right now is very increasing a lot. You probably missed the split yesterday or today, whenever this is getting recorded, but we're going through a 5-for-1 stock split right now. Stock split is basically, in a simple term, you can read the description, but in simple term, think about a banana. And when you cut the banana into 5 pieces, it doesn't mean you're gonna have those little pieces of bananas left. You're gonna have all those 5 pieces. So Tesla stock is worth more than 2,000 right now. So they're trying to divide themselves so it'll be available for the future investor to get in, for the future investors to buy that little piece of stock or little piece of banana. But at the end of the day, if you invested in Tesla before the split, you will have the whole banana, you know. I know banana is a funny term to be used, but that's what a lot of the investor and experts are using as an example, like Jim Cramer. And another thing that Tesla stock is why it's really good right now to get in is because of Battery Day. Battery Day is a very exciting day for Tesla investors or any fourth industrial age investors, because Elon Musk announced that he was going to have this event called Battery Day. He officially announced that September 22nd is going to be the official date, but he's been pushing that because of due to pandemic. As we go through the recovery in this stock, I feel like it'll be better for us to really get in taking advantage of these stocks. S&P 500. So Tesla have recently been qualified to enter an S&P 500 because they shown their values and they shown their earnings, and their company has worked tirelessly, and I follow them since the beginning of their foundation. They've been working tirelessly on creating and qualification for S&P 500. So those 3 events that are coming up just this year are going to boost the stocks up a lot in Tesla. I know some people say Tesla is a bubble, or EV market, electric vehicle market is a bubble because of all these inflation of prices and all these investors getting in and Robinhood traders getting in. But like all those news aside, the value of Tesla is right. It's just right. They do have value. It just doesn't matter what the experts and because there's no really like true experts in this market, because it's a prediction. But some prediction might be right, some prediction might be wrong, but the prediction that Tesla has this much value, I believe is right, because they do have value like that. If you see the market and if you see the news and if you really analyze them and how they're earning everything and how their value has been growing, it might not be what the experts wanted the price to be, but it might be lowered because they think in their own old ways, but they're really valued to the point of where they are at right now. So all these are like premium contents that I'll probably go over in the future. I really want to talk to you about where you are or where we are right now. So I personally are still paying bills. I personally just graduated, and I personally haven't reached the financial freedom that I wanted. Okay, so what does it mean to be financially free? You really have to ask yourself if you're rich. I know the term rich has such a bad connotation to it, but what is being rich? Like, is it having a bunch of expensive bougie stuff, or is it just a lot of salary that you get here from 9-to-5 job, or is it like a large bank account that you hold? So when you say being rich, you just gotta stray away from this negative connotation of what rich is and what society thinks what rich is, because being rich does not have to mean in a negative term, because being rich is that you're financially free from the slavery of money and the economy that you're surrounded by. And you can't really run away from that. We live in a society where social animals that live in a society that is bounded by money. And being financially free means, like for example, I have it here, that if you cannot pay your premium insurance when you needed it, you're not financially free. If you have something that you needed to pay, or if you're bounded by the limitation of money, you're not financially free. So how do we find the financial freedom that we need? That's where we want to head over, because this is what this whole course and this whole session is going to be about in EINC Finance throughout the years. To be rich and to be financially free, you have to really change your habits. You really have to look at things differently, like the market and capitalism chart that I showed you. When you want to look at this the world differently, and when you want to invest into the right places and really roll your money, because just saving your money, like I said earlier, like in the bank account, having all this bougie shit, like does not mean anything. Yeah, you can be rich and have all those. It's fine. But the thing is, are you financially free? Because I think being financially free is a lot important than having a lot of money. How are you gonna manage your financial habits, and how are you gonna manage your spending, and how are you gonna manage your assets and investment? And this is what this course is going to be talking about in the future. And I'm gonna go over every single detail, and I'm gonna go over every single opportunity in investment, whether that's real estate, stocks, or funds, bonds, or forex. There's so many words for making money out there. You just gotta find the right thing, and I just want you guys to have the journey too, like what I'm going through right now. And I'm working tirelessly to gain the financial freedom that I want, and I want you guys to come with me in this journey. And then the way you can do it is the tiers of membership goes like basic courses, plus courses, pro courses, and then Millionaires Club, which is VIP. So basic courses consist of very beginners who kind of want to try out what this whole course and session is about. This video is going to be part of it. It's like $8.99 a month, and I give you all the important things the plus courses probably will have. But if you really are committed, and if you really want to devote yourself in becoming financially free, plus courses is like perfect things for you, because it gives you all full entire content, even the details down and dirty, and you can really know what things you can expect in becoming financially free. And pro courses is for professionals. It's like top analysts, people who are able to invest on their own, and who are traders and investors who are really trying to get to the next level. And then when you keep going up to next level and next level and next level, eventually you're going to join this VIP Millionaires Club. So yes, there are going to be actual millionaires in the Millionaire Club. I already know some people who are already millionaires who are very interested in this. This club is going to be consist of just discussion and just sessions of how to find more bigger opportunities. And this is going to be a VIP group and people that are very talented. And then I also have many mentors in finance and experts who are going to be joining in the VIP Millionaires Club. But that is if you can afford it, because it is very pricey. And I don't want you to spend all these money. I want you to pick the right tier, because as I said, you gotta have the right spending and right investment. If you really can't afford it, and if you're paying pro and VIP courses like that, that's not for you. That's not how you get to financial freedom. I want you to pick the right tier for your standard and where your ambition's at. Thank you guys for listening. And if you have any questions, feel free to email me at einc.biz@gmail.com or sign up to our emailing list on einc.biz contact. Remember, there's free money and free stocks in the description below or on einc.biz. So when you're trying to get a Webull or a Robinhood, just click on the reference link and you get a free stock. Really take control of your destiny and take this membership on the tier that I talked about earlier. Take it home with you. I'm just generally trying to help people get to financial freedom that you need. You can also follow me on facebook.com/EINC or at @DSeanYang on Twitter. That's really important because I tweet and post a lot of day-to-day investing tips, whether that's specific stock or specific investment tips. It's almost daily update on where I am and where I'm invested in. This course and this session is just to get you to where you want to be, which is financial freedom. Alright, thank you guys for listening and have a nice day.